May promises to be another fascinating month in financial markets, and here are 5 events that I believe traders are going to be paying very close attention to over the course of the next month. The US jobs report is always one of the most anticipated economic releases each month, particularly coming from the US. But the next few months is going to be particularly interesting because we could finally start to see weakness appearing within the labour market that could prompt the Fed to slow down, if not pause, the tightening cycle altogether. Jobs growth has been very strong still for a number of months now, but we could start to see that significantly decline, maybe around 150,000 jobs created last month and going down further over the course of the months that follow because of the large amount of layoffs that we've seen announced at the early part of this year, particularly in the banks and the technology space. This is all going to have a detrimental impact on the labour market, and if the data confirms it, that will have a strong influence on what the Federal Reserve does. The Federal Reserve is widely expected to raise interest rates by 25 basis points at its meeting in May. But could recent events in the banking system and the knock-on effects for credit markets and the economy convince the central bank to pause its tightening cycle early? As it stands, markets are heavily pricing in that 25 basis points, but at the same time, they're pricing in 3 or 4 rate cuts by the end of the year, which suggests that traders do believe that any policy increase at the meeting in May could be a significant mistake. Instability in the banking system and the collapse of a few mid-tier US banks and of course Credit Suisse in Europe had a huge impact on financial markets over the course of the last month or so. And the recent announcement from First Republic that it saw more than $100 billion of withdrawals during that period has brought enormous scrutiny back to the banking system and what the knock-on effects were for other banks in the US, but also credit markets and the economy as a whole. People are going to continue to be very focused on this area over the course of the next month to see what the further knock-on effects were going to be and whether that's going to have a significant detrimental impact on the US economy and the global economy as a whole over the course of the rest of the year. It's not been a bad start to earnings season so far, but there's still a long way to go, including plenty more earnings reports over the course of the next month. Investors are keen to understand not just how these companies performed in the first quarter, but what their expectations are for the rest of 2023. There are immense pressures facing many companies now over the course of the rest of the year, from high interest rates, a cooling economic environment, and of course the potential for tighter credit conditions as a result of the turmoil in financial markets over the course of the last month or so. And investors are going to be very keen to understand exactly what these headwinds are, how detrimental they're going to be to their performance, and how optimistic these companies are that they can weather this storm and bounce back strongly. It's been a very volatile period for oil, starting with the turmoil that we saw in the banking system, which caused it to plummet, followed by the surprise OPEC Plus decision, which came over the weekend, causing a gap open in the markets and surging oil prices, then triggering calls for $100 oil at some stage. A lot of volatility has clearly ensued, and the question on everyone's lips is this going to continue? Now, of course, the dust is continuing to settle on all of these events, and at this point in time, oil appears to settle back into the training range that it was within from early December through till early March. But it's anyone's guess at this point whether that is going to continue to be the case with so many moving parts, up to and including, of course, the global economy and how central banks are responding to these inflationary pressures. And this is going to remain a key focal point for investors over the course of the next month. For more views and analysis from myself and the rest of the team, check out MarketPulse.com. Also, don't forget to subscribe to our YouTube channel and the Market Insights podcast.